Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, 4th day of December 2019, and this is the Daily Report for Gold and Silver. As you have probably read in our opening letter today, we talked about flip-flops not just applying to footwear worn in Hawaii, but more appropriately, the way market sentiment seems to shift day by day as different headlines come out. But the facts are the facts, and they are that the fundamentals behind this long and protracted trade war, lasting over 18 months, have changed very little. If anything, we've seen solid pushback. But an article reported by Bloomberg today was supportive of U.S. equities and took the precious metals down slightly. We did add to our position, as we said, to add at 1480. We'll talk about that in detail when we pull up our technical studies, but first to the price board. It was a single article published by Bloomberg today that really resulted in equities and gold reversing their stance from yesterday. And all that was reported was that they were getting close on the negotiations in terms of what tariffs would be taken off for phase one. There's certainly nowhere near a solution for phase one. And as for a comprehensive trade negotiations deal, well, that is still in the wind, so to speak. Nonetheless, we saw gold move down. It closed at 1480. That's down $4.40. It opened at 83. It did trade to a high of 1489.90, and that's when the ADP jobs report came out, but it did soften up as we got near the close. If you recall from yesterday's trade alert, we recommended that you reserve half of your trading capital for this trade to add to the position. So we took our first position at 1484.60, this one at 1480. So our average cost now is 1482.30. And as you can see, the market closed at 80 on the nose. Now, with the exception of palladium, all of the other precious metals did sell off. Silver taking the biggest hit of all of them, losing 34 cents or 2%, 1678. Platinum lost about 1.5%, taking it below 900 at 897.50. And then, of course, the lone wolf is palladium, up $18 now at $1,842.80. Continuing to hold its spot as king of the hill in terms of the precious metals themselves. Now, the Dow Jones Industrial did recover, gaining 146 points, and the metals were aided slightly by a fractionally lower U.S. dollar at 97.58, putting it down about 10 points on the day, or 0.1%. Let's take a look at our charts. Interesting action in gold today. Although it traded to a higher high and a higher low than yesterday, it closed down slightly, and most importantly, on a technical basis, we're still seeing some resistance coming in at the 150-day moving averages. You can see that they have just crossed slightly. However, as I spoke about in our opening letter, I believe that this market is being headline driven, and we're getting these kinds of fluctuations when there's no real news out there to report. My sense is that we will see this market move higher. Obviously, the first point we need to take out is 88 to 89. That's on a closing basis, moving above those moving averages. I think that that is not going to be that difficult. And then we'll have some resistance come in between 1497 and 1500. And then we talked about our basic goals, and that is that I am looking to exit this trade at around 1540, and I do acknowledge some resistance coming in at about 1520. However, I also stated that I believe that we are now in a fifth wave, which is an impulse wave to the upside. And so we did get a question that came in today. Why am I only looking for the market to go to 1540 or maybe even 1520 if I'm looking for new highs to breach the 1565 price level? And that is because a basic wave, and this is a major count, by the way, but our basic wave is not going to move in a straight linear or line up. Rather, it's going to move in a series of waves, something like a 1, a 2, a 3, a 4, and then our fifth wave up. And so what I'm looking at in terms of this particular trade is to just capture the moves between this intermediate wave count right here as we get our first kind of break or sell-off if the market does what I think it's going to do, which is continue to move higher. And so that's the reason I've got these targets sitting at points below the record high this year, although I believe it will definitely take out the record highs at 1565, but that's probably something we'll be looking at in 2020, and that's not that far away. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.